morning, all students. Myself Shubham here. Currently, I'm a program manager at MIT University Online. I manage blockchain and cyber security program and acting as a vertical head. So we came with a blockchain program online this last 1.5 years. Until now, like we have the taught to the more than 300 students from our faculties who are like industry experts and who are currently working in this blockchain technology from last like 3 to 4 years. Now today we have webinar from one of the industry experts, Ms. Priti Tomar, and she is currently CEO and founder of the Stat Finance, also known as Invest to Asia. So and more about the what Stat Finance or Invest to Asia is in, I think Priti will let you know. Uh, And the flow of the webinar will be like Samiti will address you about her presentation about the topic that today's blockchain in fintech and capital markets for first 1.5 hours, and last we will have the Q&A session. In between, if you have any questions, you can just put in the chat box or in the question section. And at last you will take that question. Now I request Smriti to start with the webinar.
Thank you so much. Thank you for the introduction. I'll just take over from here. Please, before I start with this, please let me know if I'm not audible, or in case you have any queries in the middle of presentation. I would appreciate if you can just note it down or put it over in the chat box, and maybe we can discuss it later. And let me know in any case if the screen is not visible in between, or am I in case if I'm not audible. So, all right, I'll just start with the presentation then. And before that, let me just introduce myself. I'm Smriti, CEO and founder of Stack Finance, more popularly or previously known as Invest to Asia. We basically are a fintech company, more precisely into wealth management, personal finance, and banking sector. Rest I can maybe tell you later on, and we should, I think, start away with the presentation. So I'm here to talk about blockchain and the use cases of blockchain in finance, fintech, or capital markets, which I feel is very much, I guess, the hot topic right now in the industry, outside. Everybody right and left is talking about it, not just because finance is something that everybody is really interested into, but I think it's somehow very much involved in our daily lives, whether it's whether it's money in general, expenses, whether it's financial industries, organizations, and also the technology that we're talking about, blockchain. It's going to bring in a lot of disruption, bringing in a lot of changes in this industry, and I'm sure that it's going to affect our daily lives as well. So it's important for us to have certain idea about this technology and also its uses in fintech and how it could possibly affect our lives in fintech. So all right, let me just start with the presentation. Just a second. Sorry. Please let me know in case anytime the screen is not visible. So, okay. I am quite new to the industry. It's been only 3 to 4 years for me into blockchain, but I have been very much into finance or investments right since teenage. Finance is something which is very close to my heart. I'm really passionate about, and that is why fintech really appeals to me, and the invention of this technology in fintech. So I have not exactly crossed a decade into this industry, particularly blockchain, but so is the technology. It's very nascent right now. It's still evolving. There are so many new trends that we keep witnessing each day. And I think nobody exactly is an expert into this technology, but we are all learning each day as this technology is emerging itself. So before we start with the technology itself, let me take you back to the history, time of 1993. A time when economics profession was mostly dominated by increasing use of maths and formal modeling. It was then that a gentleman known as Douglas North challenged this norm of mathematical modeling in economics, and by studying actual economic history instead of maths and economics, because he had some questions in mind and he was looking for answers to these questions. These questions were sometimes also raised before by Adam Smith. What were those questions exactly? Adam Smith used to wonder that why do some nations become rich while others remain poor? Now, this is something which also bothered Mr. Douglas North, and he was constantly looking for these answers. That is why he started studying history in economics. So he said that, for example, if we assume that there are different nations who have different sizes of cake. Now, by cake, I mean if different nations by default have different resources available with them. Let's say in India, we have a lot of natural resources. Maybe in US, there might be a lot of commodities or metals. In Asia, in general, we might have a lot of grains. We have a lot of natural resources instead. So he said that if all of these nations have different resources by default, but the government intervention through things like taxes, transfers, redistribution of taxes, what are the other government policies and reforms, this can actually redistribute the slices of cakes. And if done poorly, it can actually cause the cake to shrink. So he said that intervention of government institutions and financial institutions actually leads to distribution or misdistribution of these resources within the nations and internationally as well. So Douglas North's proposition in a nutshell was that institutions matter, and hence he came to be known as the founder or father of institutional economics. Through him, people came to know about institutional economics, which later on was studied by a lot of other people and also became very famous. Anyway, I would again get you back to the history again now to the time of 2008. I think it's very famous for the financial crisis that took place, where the root cause of what happened during the subprime mortgage bubble, and which was then carried over to the whole global banking system, was in fact society's unquestioning faith in these financial institutions and the integrity of their record keeping practices and systems. So people in general trusted these financial institutions a lot. But as it turns out, and during the financial crisis of 2008, which is very famous, these financial institutions, may it be Lehman Brothers or whatever it was, it actually started because of them, and it led to a global crisis. It was not just in US, but it spread over across to all the overseas nations as well. Now, going back to another very important event in history in the chronological order, after just a year, Greece debt crisis happened. Now, during the Greece debt crisis, Goldman Sachs, which is something very famous, a financial institution, was accused of helping Greece hide how heavily it was borrowing. And the crisis continued to mount as Germany opposed to bailout. So basically, these financial institutions were actually helping these nations to take more and more debt and loans, which became a debt crisis, which ultimately became a debt crisis for Greece. Now, something very recent. This is not even in history, but something which is very much prevalent even now in the status quo, which is bothering a lot of people, particularly 2.5 billion people. So 2.5 billion people around the world are actually unbanked. They have little or no access to credit or modern financial instruments like bank accounts, like credit cards, debit cards, or any banking services. They remain excluded from the global economy and have no record of the financial history. They have no record of the financial history, no transaction history, and hence they are excluded out of the financial ecosystem. Now, all of this sadly makes me question the unwavering faith of Mr. Douglas North, the very proposition that we had started with, where he used to say that financial institutions matter a lot. It actually makes me question the integrity of these financial institutions. How can they sustain? How can they actually carry the burden of all of the people worldwide? And to make sure that everything runs smoothly without any of the crises that we had, that we have recently, that we just discussed. So the solution to maintain a balance in the world, maintain a balance in the economy or in the financial ecosystem is not just financial institutions, it's not just government institutions, but it's actually, the solution lies in actually a technology, the technology that everybody right and left is talking about, and obviously what we're going to discuss today, it's blockchain. So I'm not saying that blockchain is going to solve everything, that blockchain will probably mitigate all the crises that are going to come in the future, but on a certain extent, it can help us control the extent of the crisis. The solution lies in the balance, in correct balance between the intervention of these financial institutions and the technology. So, sorry. So what exactly is blockchain? So in terms of definition, if I have to explain, blockchain technology is actually a decentralized database that stores a registry of assets, and transactions across a peer-to-peer network. So it's basically a public registry of who owns what and who transacts what. The transactions are basically secured through cryptography, and over time, transaction history gets logged into blocks of data, which again are then linked cryptographically together. This actually creates an immutable record of transactions across the network, so that nobody can really tamper this network, nobody can really tamper these transaction ledger. Now, this definition of blockchain might sound a little strange for you, because, at least for the layman, because how we usually visualize blockchain is through bitcoins. And I know that many of us actually came to know about blockchain technology through Bitcoin, because it had been the buzzword since, I guess, 2012, 2014. So let me give you another description, another practical example of how exactly transactions are recorded over blockchain, or how exactly Bitcoins or any other cryptocurrency is usually transacted over blockchain. So what really happens is that whenever someone requests a transaction over a blockchain network, the transaction could be in the form of cryptocurrency or any other form of, let's say, virtual currency or any other transaction. What happens is that request is then pulled up to the P2P network, the peer-to-peer network, which contains various computers. These computers that are spread across this blockchain network are actually known as, in technical terms, nodes. So this transaction, I would say, is broadcasted over all of these nodes. Now there has to be validation of the transaction. What happens is that all of these nodes work towards validating the transaction. How do they do that? Is by basically computing various algorithms. So there's a computational algorithm that all of these nodes have to work for. Now, once a transaction is verified, so basically there are different for different blockchains, there are different kind of algorithms that you have to solve. So they make sure that validation process is highly transparent, it's highly it's highly authentic, and hence the computation that is required is very intensified. And as you might know, that people might have heard that for mining of Bitcoin, so to say, in terms of Bitcoins, validation is actually mining. So for mining also, they need very ASIC servers or GPUs. This is not that something that can be executed on a normal computer or a normal person can. So this requires a lot of electricity, a lot of energy, and hence the validation is actually properly authorized. Now, once the transaction is authorized, or the transaction is verified, the cryptocurrency, the records, or whatever that was being transacted is then completed. The transaction is then completed. Now what happens is that a new block has to be attached to the blockchain, and hence it's known as the chain of blocks, because each time a transaction is executed or validated, the block of the transaction is added to the network. So what happens is that a new block is created, which is then added to the existing blockchain network, but such that it's very cryptographically secured and it remains permanent, unalterable into the network. Once verified, the transaction is combined with the other blocks of the data, and hence a ledger is created. Now, ledger is basically a record of all the transactions. So this essentially lays the foundation of blockchain. This is something that you might understand in terms of Bitcoins or in terms of any other cryptocurrency exchange. There are so many technologies that come and go, but why does everybody right and left talk about blockchain? What is that blockchain technology brings on the table, or what is that is so unique about this technology that everybody wants to incorporate this in whichever industry, be it, I mean, whether it's finance, whether it's supply chain, medical, insurance, anything. So there are few inherent qualities or inherent properties of this technology, blockchain technology in general, and because of all of these features, it's usually utilized, or I would say there are various use cases of this technology across various sectors. But essentially, if you break it down, it's because of these 4 to 6 features. So first is shared ledger. So shared ledger is basically a shared record. Now, why is it shared? Because across all the computers that there are, or so to say nodes that there are on the peer-to-peer network, this ledger or this record is symmetrically shared across this P2P network. So this makes the system resilient by eliminating a single point of failure. There's never a case of single point of failure because all of these have the same record, same permanent immutable record on their network. Second is consensus. Consensus is something very important. I would say this in practical terms, if I have to say, this is actually a democratic feature of this technology because a transaction is only committed when every party on this network agrees to that particular transaction. Otherwise, it will never be added. It will never be validated for to be added into the blockchain. Third is provenance. Provenance is basically that the entire history of particular asset of a particular transaction is available over blockchain. However old it may be, you can always retrack towards its origin, and this is why, and this is I would like to highlight, because of this exact property, blockchain is very much being utilized into supply chain, because you can then basically retrace the very origin, the path through which a particular commodity has been added into the supply chain. So there is no counterfeiting of products, and this is why it's being used in supply chain. Then there's immutability. So as I said, the records are actually immutable. Basically, you cannot edit the records once committed or once added into the blockchain. The information is permanent, and you cannot make any changes. You cannot delete, edit any block, any data onto that network. Finality, obviously the same thing, and then there are smart contracts. Smart contract is something very useful. So this is what was introduced through Ethereum blockchain. So as we know, blockchain is very much popular. I would say the genesis came through Bitcoin because of Satoshi Nakamoto. The only demerit, or I would say the only problem with Bitcoin was that it didn't have smart contracts. It could not move beyond transactions. So that is why Ethereum came into place. And when Ethereum came, in general, if I have to explain in very, I would say very broadly, Ethereum was basically Bitcoins plus smart contracts. Now, what are smart contracts? Smart contract is basically a code that is built within a blockchain such that the computers execute that, or basically computers execute these lines of code based on an event. Now this code is automatically triggered based on a particular event. So if again I have to say in very general terms, smart contracts are nothing but real world contracts converted in a blockchain network. So it's basically a set of conditions: if this then that, if this then that, but they are automatically triggered, and hence the transaction can automatically be executed through smart contracts. Smart contracts are very much useful in insurance industry and also finance industry. So we'll discuss that later on. And this is why, so in general, these I think are essentially all the features of blockchain. And because of these features combined together, blockchain becomes a unique and very important technology in various applications. People tend to mistake Bitcoin for blockchain. Precisely speaking, blockchain equals Bitcoin, whereas blockchain, precisely speaking, people think that blockchain equals Bitcoin, and this is why I think even the industry is facing such a friction from the government side, because they are very much reluctant, they're very much hesitant, or they're very much skeptical regarding the introduction of blockchain technology into various industries, because I think everybody considers blockchain to be equivalent to cryptocurrencies, whereas blockchain is only the technology behind Bitcoin. It's the inherent technology that is behind Bitcoin, I would say the engine that's running behind Bitcoin, but not exactly the cryptocurrency, the Bitcoin itself. In fact, there's not one but different kinds of blockchains. So there are numerous blockchains, but if I have to really broadly categorize them, there are three kinds of blockchains. There's public blockchain, there's consortium blockchain, and I would say semi-private blockchain, and then third is private blockchain. So these can be categorized based on various features, but the most important is consensus. So as I said, any transaction that is executed over the blockchain network has to be properly validated, and the validation process is known as consensus. In case of public blockchain, the consensus is done by all the miners or all the nodes that are present on the blockchain network. In case of semi-private blockchain, only a selected set of nodes or a selected set of computers are allowed to do the validation. And in case of private blockchain, only one particular organization or one particular node will be allowed to do the validation. Now, read permission, the permission to read the transactions or read all the blocks in the transaction. In case of public blockchain, it's public, more like democracy. In case of semi-private blockchain, again, it could be public or it could be restricted, depends on the use case of that blockchain, in which industry is it being utilized in. And third, in private blockchain, it could again be public or restricted, depending again on the use case. Immutability, it's impossible here to change the transactions or to change the ledger record in case of public blockchain. But in case of private or semi-private, it can actually be tampered. Efficiency in case of public blockchain is pretty low. This is because when consensus has to be drawn from all the nodes or all the computers on the network, it becomes something of a tedious task, because it involves a lot of computational algorithms to be run, and hence the time required becomes more. Also, the efficiency reduces. But in case of semi-private and private, because there's only a set of nodes on one particular node doing the computation, it becomes very easy and efficient. Centralization, there's no centralization in case of blockchain. Although yes, the inherent property behind blockchain is decentralization, right? But in case of private or semi-private blockchain, centralization is compromised because there's a set of people or one person that is governing that blockchain. Then consensus process, as in who enters into the network to validate the transaction. Again, here is permissionless in case of public blockchain. But in case of private or semi-private blockchain, it's actually permission. So only particular people will be allowed, particular people who, I would say, pass a certain authority or authorization test are allowed to enter into the network and do the consensus. So all of us use internet every day, but how many of us actually know that how does it work in the backend, or what exactly is the technology and how does it work under the hood? Unfortunately, even blockchain is a technology that's not exactly beautiful nor invisible, but largely useful in industries, in various industries. Although I'm here talking about exactly finance, but let me give you a brief about what are the industries that utilize blockchain for various use cases. So as I said, there are just a few features because of which blockchain is utilized into various industries. So let me, so I have here categorized various industries that utilize blockchain based on the feature exactly, which is useful for that particular industry. So for example, in case of smart contracts, as we discussed, smart contracts are very much useful in gambling, in escrow accounts, and in creating digital rights. So for example, let's say if this person, let's say if there's a particular use case or an example where it's, let's say, an insurance claim. Now, in insurance claims are being automated now because of the blockchain technology. How exactly? So basically, they automate it through smart contracts. So it says that if, let's say, a particular car is damaged on this and this date, within these and these boundaries, then the person is allowed to claim the insurance, let's say, to an X percentage. So these are certain smart contracts that are run over blockchain. Similarly in gambling, similarly in escrow, let me not go into details. I'll just quickly go to other industries as well. Now there's digital currency, virtual currency or fraud reduction, for which it's being utilized in e-commerce. For example, it's been said that Amazon is bringing up its own virtual currency now. Facebook already has brought its currency, I guess, if you know, it's Libra. So what they're doing is essentially decentralizing payment systems, at least on their network. At least the people who use Facebook will be allowed to use Libra for various transactions or other as other financial instrument. Then global payments, remittance is very useful. There are various countries, various banks, especially in Singapore and South Korea, who are actually experimenting with virtual currency to be utilized in intra-bank payments, in remittances, obviously P2P lending, also P2P investments, actually microfinancing, lending to people. Third is record keeping. Because of its record keeping properties, it's actually being also utilized in various loyalty programs, as I said, supply chain, in ownership, also in IP. So for example, I don't remember, but there was this particular institution in, I think, United States, which is utilizing blockchain to basically keep a ledger of the degrees that it provides through the institution. So it's also being utilized, the record keeping is also being utilized in IP, intellectual property, in, as I said, educational institutions for record keeping of their educational degrees. supply chain, ownership, proof of identity, intellectual property, obviously. Then securities. Now, how exactly securities is that blockchain is utilized to, we'll also discuss this in detail, but just let me go through it. It basically creates digital security. So on blockchain, traditional security gets converted into a digital security, which is utilized in, again, private markets, in debt, crowdfunding, derivatives, etc. So yeah, here is the map where, in case you can go through it briefly to see what are the kind of use cases that are being executed in various parts of the world. I guess India is the only one lagging behind right now, but I think NPICI is moving on, or taking pace with it now. So, for example, South Korea is, as I said, yes, is experimenting blockchain ecosystem over banks. I remember Australia, Hong Kong have pushed their stock exchanges over blockchain now. Estonia is very famous, especially for virtual currency business. UK is using blockchain for dispersing grants, in fact. So, given the very foundation of blockchain technology, which is ledger keeping, or record keeping, transactions, asset holding, uh, asset management, in fact, not just holding. Finance is a sector that is basically looking to face major disruption. Finance, because essentially utilizes not just one property of blockchain, but in fact every property, whether it's, as we discussed before, whether it's smart contracts, whether it's ledger, whether it's the immutability of the records, whether it's the transactional history of the records, whether it's creating digital assets. So these are a few features. These are, I would say, finance is the only industry that actually comprehends all the features of blockchain, and hence this technology, I believe, is very much suited or can be exploited to the utmost level in the industry, which is finance. So let's move ahead to discuss what exactly are the use cases, or what exactly are the industries within finance where blockchain can be utilized. So these are 7 areas which are very famous. They're also known as sorry, there are so they are also known as 7 golden gates of finance. So clearing and settlements. First, let's discuss clearing and settlements. As you know, in the capital market sector, there are 2 houses. For example, even in India, we have a clearing house and a settlement house, and so is across the world. Now, what happens is essentially when clearing and settlement houses come over blockchain, there's a centralized ledger that is maintained for both the houses. So basically, just imagine one. Okay, right now what happens is, for during a trading process, when a particular stock is bought by A from B, at least 6 intermediaries come in between. I'll also show a diagram later on which will make it more clear. But what really happens is that there is a very repetitive and a tedious process that is involved between these 6 intermediaries, due to which it's said that there is T+2 cycle of trading in India. It's essentially the bureaucratic complexity because of which it becomes T+2. Otherwise, the process in itself, or the process fundamentally, is very simple. So what happens is that when clearing and settlement houses are brought over blockchain, there's a single ledger that is basically mutually available to both clearing and settlement houses. So basically, they can when the blockchain exactly acts as a single source of data accessible to both the parties entering into a transaction, thereby allowing real-time settlements of the transactions and removing process redundancies. As I said, there are repetitive processes involved. So what happens is that there is real-time clearing and settlement process. So instead of waiting for T+2 days, there could be real-time transactions of the stocks or shares or bonds. Second is payments. Payments is something I think I don't even need to explain. Peer-to-peer payments. So for example, Bitcoin, whether somebody is sitting there in Australia, US, or somebody is here in India or Africa, people can basically do borderless transactions in real time. They really don't have to wait for banks to come in between, banks or brokers or any remittance industry. So this is what remittance firms are utilizing blockchain for, to basically eliminate the need for all the intermediaries in between and have a decentralized process, so that payments can really happen peer-to-peer instead of involving various other authorities in between, be it banks or any other financial institution. Then there is reporting and compliance. So basically, because of the record-keeping method of blockchain maintains an immutable record of the process or the transaction history. The business unit of the regulator, which is governing the organization, can perform an audit trail on these records. They can also be made a node on the network to monitor it real time. Then there is transfer of instruments. This is very important. Blockchain system allows financial institutions to digitally issue instruments and trade them on a P2P basis without the need of intermediaries like clearinghouses. So what really happens is that financial institutions right now are involved, like let's say brokers or banks. They are, so for example, if somebody here wants to invest outside in America or in US, in China, you will have to go to your bank, which will create your trading account probably, then go to a broker, then there would be remittance, etc. So at least there are 6 to 7 parties that are involved between that particular transaction, for that particular transaction. What really happens over blockchain is that transfer of instruments or transfer of assets become very easy because, as I said, they're converted into digital securities. And for digital securities, there need not be any of these intermediaries. You can do it directly from here to there, from here India to, let's say, in China. Then there is digital identity. Digital identity is another sector where blockchain is being used for. Blockchain-based identity systems record the identity of an individual or a corporate entity over network and share it on the banks, thereby minimizing the efforts of KYC. So what really happens right now is that for KYC process, obviously, as you know, that a particular, let's say, company collects the data. Now this data is then validated to the government organization or through the government resources. What really happens is that if you have a decentralized database which is spread across a particular network, let's say all the companies, government share the same database, this can actually be made very fast and there could be real-time validation of the KYC of the users. Then there are corporate actions like dividend payments, interest payments, etc. So as I said here, smart contracts are utilized. So for example, dividend payouts. Whenever a company generates profit, or let's say the quarterly statement is released for, let's say, Tata, the smart contracts can basically automate dividend payouts. So whenever there is a particular, let's say, profit of X percentage generated, it will distribute, let's say, 0.00x percentage to every individual that holds particular shares of Tata. So this is how automatic dividend payouts happen through blockchain. So in fact, as you can see, financial institutions are the biggest consumers of blockchain right now. And in fact, I read a report which I have presented here. It says that 72% banks have utilized blockchain or DLT. DLT is basically distributed ledger technology. It's said to be the parent technology of blockchain. 56% fintech companies are utilizing blockchain, 47% insurance companies, 42% custodians, 42% exchanges. So all of these are basically, I think, until clearing houses, all of these are actually financial institutions that are utilizing blockchain, and then rest are artists, non-profit, other financial institutions. So this is how heavily and how I guess the massive adoption of blockchain is happening across various industries, especially in finance. Now, what is the roadmap of blockchain technology in finance, or how are we going to see the changes, see the adoption of blockchain, see other use cases being brought up for blockchain? So as you can see here, it says that today, right now, there's a lot of use case in the maximum utilization of blockchain is in Bitcoin transactions, in exchanges that deal with cryptocurrencies. So that is the use case that is right now very much popular and massively adopted across the nations around the world. In next 12 to 24 months, it says that there would be initial capital market startups or limited test cases that would be brought up. So there would be startups that would be running pilot projects with maybe financial institutions, banks, etc. There would be seed proposals for market standards to basically introduce blockchain into the market or into the industries. Also, there might be disruptive innovations in the coming 24 months. There would be disruptive innovations, basically bold transformations in at least small markets. There would be narrow applications in large markets, and might be some new markets that might be defined for the blockchain use case. In coming 5 years, it's very important that there would be thin applications gaining wide industry traction. So there would be initial adoption of distributed ledger in thin parts of the industry. Overall, so for blockchain to work, especially in a wide industry basis, for example, in finance, it's very much important that all the institutions or all the authorities that are playing a role into that circle. For example, in investments, as I said, there are around 5 to 6 authorities or parties that are involved, including you and me as a user. So it's important for the blockchain technology to be adapted into this scenario, that every party or every stakeholder should also be there on blockchain. Otherwise, me being on blockchain cannot exactly serve the purpose. So in the coming 5 years, it said that all the parties would start agreeing, there would be a mutual agreement on the adoption of blockchain technology, and hence there might be replacement of some existing systems. So as I said, so we'll also discuss it later on, that there are various countries that are now actually disrupting their stock exchanges to sort of bring blockchain and replace the existing traditional, or I would say redundant, stock exchanges through blockchain. In the coming 10 years, there would be long-term and mass adoption, major industry-wide disruption, and lessons would be learned from numerous iterations. So various startups that are doing various use cases through blockchain. Big industries would start learning from them, and start adopting blockchain into their use cases as well. There would be industry-wide familiarity and confidence in this technology. So that's the kind of roadmap that people have defined, or experts have said that blockchain is going to follow in the finance industry. Sorry. So moving ahead, there are to give you, I mean, this was all, I would say, a theoretical explanation of how exactly finance comes into play in blockchain industry. But to give you a quick visualization of how exactly blockchain is being utilized, or how blockchain is being already implemented into various industries in finance, let me give you some uh, pictures of use cases actually. So I have drawn, I think, 3 to 4 use cases of blockchain that I really find very exciting and disrupting in finance or in the fintech industry. So let me just showcase them. So the first is, as you can see, there's NASDAQ, there's Japan Stock Exchange, and ASX's Australian Stock Exchange. So why exactly have I put these pictures here is because, as I said, these stock exchanges, actually I have missed a few. There's also Hong Kong Stock Exchange, and could also be in the future South Korean Stock Exchange. So all of these stock exchanges are, in one way or the other, what they're doing is essentially removing one or two, or multiple intermediaries that come in between. As I said, clearing or settlement houses. They could also be removing brokers, or maybe creating digital identity of the users. Essentially, what I'm trying to say is that all of these stock exchanges are now utilizing blockchain technology for various functions. They're not essentially removing everything and replacing it with blockchain, but what they're doing is adapting this technology for at least parts of their internal operations. So NASDAQ, which is the US stock exchange, it has already adopted blockchain technology for basically, I think, digital identity purposes. Japan Stock Exchange is now, again, utilizing blockchain for replacing the clearing and settlement houses. Australian Stock Exchange is, I think, the most advanced. It is now beyond the pilot stage. They were the first ones to replace the stock exchange, and it's known as CHESS. Maybe you can look it up later on. So they are, in fact, the earliest movers, Australian Stock Exchange, into this industry. Second is BankUU. Now, what is BankUU? BankUU is basically a company that is there in Africa, I think. It is actually run by some Indian. Now, what they're essentially doing is, as you can see, dignity through identity. So they're basically serving in countries like Africa, serving to immigrants or people who are very poor and are, as I said, excluded out of the financial industry. So what they're doing is that they are creating a private blockchain. Just a second. So they are creating a private blockchain to bring these people who are excluded out of the financial industry, the financial ecosystem. Now, why they're excluded out of the financial system is because they do not have any transaction history, or sometimes they do not even have their own identity to prove. And this is why banks wouldn't take them. So what they're doing is that they're creating a private blockchain where these people can basically participate. Now, when these people are participating, they are basically, whatever commodities that they're exchanging, whatever transactions that they're doing over this blockchain. And through this, a transaction history is being created of these people. Now, when they have a particular transaction, they believe that when they have enough of validation, they'll be able to now approach the banks, and the banks will now, or banks or other financial institutions will then take them into the ecosystem later on. So this was one of the use cases. Then third is Smart Valor. Now, what is Smart Valor? Smart Valor is basically a company and startup actually that is based in Switzerland. So Switzerland is, in case you know, it's known as Crypto Valley, just like it's like analogs to Silicon Valley there. So Switzerland is seeing massive adoption of cryptocurrency and blockchain. So Smart Valor is basically what it's doing is it's tokenizing investments. So things which were before illiquid or inaccessible to people. Let's say for me to invest into international market, or for me to buy some very let's say exotic international painting by some very famous artist, it's very difficult for me. Maybe one, because I might not have access to it. Maybe two, because I might not have enough money for it. So what they're doing is essentially converting all of these assets, more importantly, private assets or private equity. Let's say right now I cannot buy any shares of Ola or maybe PayTM because they're not publicly listed on the stock exchange. So what they're doing is they are creating digital securities for these traditional securities and now helping people to invest into them. So they're essentially making illiquid assets liquid and making them accessible to various people and average users like you and me. Next is remittance solutions. Now, how is blockchain utilizing remittance solution? Because this is the industry which has seen the massive and the maximum adoption of blockchain in finance itself. So let me just explain you what really happens. So as I said, if somebody in US, so for example, here in this example, somebody from US wants to remit money to, or somebody from I think Europe, no, okay, US remits money to Europe in Germany and Europe, what essentially happens behind the curtain is that person A will go to bank A and person D, or let's say person B, will have to go to the bank in Germany. Now, how exactly the money flows is that the bank A right now might be a local bank in US. So it will go to an international bank, bank B in US. The money from bank A goes to bank B, having relationship with bank C. So basically there could be a global bank. Let's say HSBC. HSBC is there in New York, HSBC is in India, HSBC in Europe, HSBC is in China. So the money from my current bank account, let's say it's HDFC. HDFC is not present internationally, so HDFC will give money to HSBC. HSBC then gives money. There's a wire transfer that takes place from bank B to bank C. So HSBC, which is there in US, will give money to HSBC that is there in Europe, in Brussels. Then HSBC then gives money to another local bank that might be in Germany. This local bank is actually the bank where the person who wants to take the money has his account. So as you can see, there are 4 banks involved, and there's also wire transfer that is involved. So it's not just about time, but it's also about the money. At every particular stage, whether it's to bank A to B, B to C, and C to D, at every particular stage there would be some amount of commission that is charged. So let's say right now, if I want to remit money to US, if I have, let's say, 5,000 to remit, close to 2,000 would be charged as a commission by these banks. So that is how I would say inefficient. That is how badly they are digging into our pockets in terms of remittances. What benefits does blockchain bring in when leveraged for cross-border money transfer is that when blockchain comes into place, what really happens is that bank A can directly transfer money to bank B through blockchain. So basically what happens is that bank A converts the money into cryptocurrency or virtual currency and transfers it directly to bank B. Now bank B in turn, now that it knows that I have got some cryptocurrency, it will then convert the cryptocurrency to the actual fiat currency, which is the cash, and we give it to the person who wants the remittance money. So this is how it happens. It eliminates the presence of bank B and C. So essentially, blockchain in any use case of finance, what it essentially does is removes intermediaries so that everything is decentralized, at least as far as it can go. So this was all about remittances. Next, I think here are few use cases, exactly the companies which are working in remittance industries. So I guess there's nobody from India here. But from all I know, Abra is the company that is there in US. CoinPip is spread across Asia. Bloom here, as you can see, is actually connected to most of these. So Bloom is actually hub of all the crypto remittances. Ripple, as you might know, Ripple is a cryptocurrency that is mostly used in remittance industry. In fact, that's famous for remittance industry. Stellar was a fork, or I would say a byproduct of Ripple, in fact. So for people who do not know about fork, fork is a term used in this blockchain technology itself. Sorry, I do not have it in the presentation, but I can just explain it here. What happens is that, as I said, whenever transactions are being included into the blockchain network, blocks are added one after the other. Sometimes what happens, if there is a 51% attack, 51% attack is very famous. What happens is that, let's say in a particular blockchain network, there are 10 people and 6 of them are best friends. And they decide that in those 6 people, they really want to, let's say, smuggle something or dwindle the money there. What they'll do is that they'll validate a transaction which never even happened. So basically, there was no transaction of money, but they recorded a transaction of money. Because blockchain works on kind of consensus, or as I say, democracy. What happens is that whenever there are 6 people who say, okay, it's a transaction, it's validated, it's actually added into the network, but essentially, in substance, there was nothing that was transferred. So this creates a fraudulent transaction to be added into the blockchain network. Now, once it's identified, at some point it will be identified that it's a fraudulent transaction, or it's a block that was never intended to be into the blockchain. What happens is that after that block, all the other blocks that are created would then be added into a fork. So what happens is that the blockchain was supposed to go one way, but now that there is a diversion created because of this particular block that was actually a fraudulent transaction, a fork is created. So what usually happens is that whenever a fork is created, it creates another cryptocurrency or another virtual currency. So Ripple was the initial cryptocurrency. From it was born Stellar. Stellar is the fork created out of Ripple. Just a side information. So next, let's move on to what are the problems with this technology. We have discussed all the features of the technology. Why is it so useful in finance, particularly finance? And what does it bring on the table, and why various industries really admire this technology. Let me discuss about what are the problems with this technology and why is it not being so widely adopted across all the industries. So these essentially are the problems with this technology. First is basically lack of privacy, security concerns, no centralized control. Then there is rise of 51% attack, which we just discussed, and then there is cost. There is basically lack of scalability. There is sorry, I cannot see this. Regulations and integration. Obviously, that's the major concern. So let's start with lack of privacy. So decentralized blockchain actually lack privacy. What really happens is that they make full acceptance very difficult, which makes its full acceptance very difficult. Not only is the information not private, the information is spread across all the nodes that there are in the network, but it's also readily accessible at any given moment. So whatever transaction that happens, there's always a transaction, there's always a particular address given to that transaction. So whoever wants to basically trace back the transaction, they can easily get the information. So not just the transaction is readily accessible to at any given moment to any user, it's also relatively easy to figure the identity of an account on the Bitcoin blockchain, for example, after receiving payment from the person. So all the people say that it's anonymous, but you can essentially get the identity of the person if you have done a transaction with him. So there is a concern of lack of privacy in this technology. Obviously, unless it is private or semi-private blockchain, it's usually the concern with public blockchain. Now there are security concerns also. Blockchain-based assets like cash, if cash is in your wallet, if cash in your wallet is, let's say, stolen or it's lost, then it's gone forever. You barely get it back. Similar is the case with blockchain. Blockchain-based systems use advanced cryptography and encryption that are more secure than internet standards, passwords, or number access codes right now. But however, more security can sometimes result in system being less secure. So for example, right now for any cryptocurrency transaction, essentially Bitcoin transaction, you provided a public key and a private key. Now this private key is actually the proof that you hold certain number of Bitcoins. If you happen to lose this private key, you have actually lost, let's say, I don't know, whatever worth of Bitcoins forever, because once you've lost the private key, you cannot get access to it back. You cannot get access to whatever virtual currencies, ethers or bitcoins you were holding. So that's a major issue. Then second is there's no centralized control. So basically there's a person who, Robert Sands, who was basically an executive at London-based stock exchange. He said that in case of central markets, there's always a mechanism to correct an attack. But in a blockchain, there's no mechanism to correct it, and people have to accept it. That's the problem, as I said. So there is always a fork created. You cannot retract or go back and eliminate that block. So blockchain-based systems are designed to replace third-party intermediaries, putting the responsibility and control back to individuals involved in the transactions. What happens is that majority of the people on the network create issues with regards to control of blockchain. So this is why regarding the control, there is always some issue. There's always some concern regarding fraud and also attacks. Then there is rise of 51% attack, I think, which we already discussed. So if someone were able to control over 50% of the computers on a blockchain network, they would end up controlling the transactions on the blockchain. So a malicious user controlling over 50% of the computers on a blockchain network is known as basically 51% attack. Then there is lack of scalability. Lack of scalability essentially means that at the current, just a second. Yeah. So lack of scalability essentially means that at the current rate of energy consumption, so because for every transaction to be added into the blockchain network, there has to be a consensus run. The consensus is usually right now, as of we know, is proof of work. So now what is proof of work? Proof of work translated into actually literal terms is that whenever you're working, basically whenever your computer is working, whenever you are executing a particular computational algorithm through your computer, which is a node into the network, you are essentially providing a proof that behind the transaction there was some validation being done. That is why it is known as proof of work. So, but essentially the problem with this proof of work is that there's a lot of energy, there's a lot of electricity being consumed, and that is the concern with, I think, majority of the governments, and this is why they are essentially banning or restricting mining of Bitcoin because it consumes a lot of electricity. So this makes the companies like Visa or MasterCard more successful because they don't really have to utilize resources or exploit resources like energy or electricity. But in case of mining or in case of blockchain, essentially, there's a lot of energy being wasted. Then regulation and integration concern, obviously, for the blockchain to be adapted massively or to exploit the blockchain to the maximum extent, it's important that government has to be a little flexible with the reforms, has to be flexible and adapting to this technology. But the regulations are a problem because a technology like this cannot be trusted very easily. So as I said, it's also prone to attacks. Number two, there are concerns like how would the taxation be implemented when it's across borders? How can it be implemented on such a huge scale? It's decentralized. What will happen if everything goes to waste? What happens if there are particular people who take control of that network? So that would be a problem. So that is why governments have a concern. Governments don't really, so for example, in India, the government is not really getting into the details. They draft reports and everything. But I guess nobody really gets into the details and intricacies of this technology. And hence, sometimes there's a misunderstanding regarding this technology. For example, 3-4 years back, people used to just mistake, as I said, blockchain with Bitcoin. And that is why there was some reluctancy regarding the adoption of blockchain technology. But yes, it's changing. It's being adopted now. As I said, NPCI recently passed some blockchain-based ledger keeping transaction method. So this is how actually the government is also adapting. Now let's move on to other things. So how scalable and feasible is blockchain really to implement? So if we really want to implement this technology, how scalable can it go, and whether does it even provide any returns? Is there any use? Is there any? I would say, is there any? Just a second. Yeah. So is there any particular, I would say, benefit out of massive adoption of blockchain? Would it even give you the return for the money that is utilized, for the money that is used in this implementation? So basically, to implement blockchain in any industry, there's a lot of resource being used. There's a lot of money that goes into the implementation of the technology in the industry. So we have to see whether is it even scalable, the trade-off between the money and the returns and the implementation of the technology, is it even feasible? So this is a particular, in fact, this is some statistics that I had found before. So it says that there are various levels of adoption of the technology, or as to say, there are three categories into which blockchain technology adoption is distributed. So there are high impact projects, there are medium impact projects, and there are low impact projects. So for example, startups that are usually implementing blockchain technology, they come into low impact projects. Whenever, obviously, there's a, as I said, whenever NASDAQ or Australian stock exchanges, they are working over blockchain, it's a high impact project because it's going to impact a lot of transactions. So it's basically comes into high impact category. So it says that depending on the impact of the project will be able to break even. The duration to break even for the cost that was involved in implementing the blockchain technology depends on the impact of the project. So if it's a high impact project, it said that it breaks even in just 2 years. While if it's a low impact project, it takes time to break even. It takes around 5 to 6 years to break even. While if it's a medium impact project, it takes 3 years to break even. So this was all about the scalability and the feasibility of this technology. So as I said, there's a lot of cost involved. Yes, there is a lot of resources that are utilized in implementing blockchain, but depending on the impact, if it's a high impact project, if you're doing something really that's going to disrupt, it's going to break even definitely. So it makes sense to utilize the technology, but depends on exactly the use case. Next is, I would like to discuss about one very important thing, which is decentralized finance. So when we're talking about blockchain, it's also, and especially blockchain finance, it's also important to talk about blockchain decentralized finance. So basically it said that finance industry is undergoing a phase where from centralization is where a certain set of organizations or individuals have control over a particular industry. So, for example, in case of finance industry, there is a set of institutions, whether it's banks, whether it's other financial organizations, which have a control, which have a sort of a monopoly over the industry. But it said that finance industry is going under a disruption where this centralization will break into a lot of small players and which it will actually decentralize. So let's move on to that. So the most exciting revolution in finance is happening right now. A bright future is being built. And now it's said that people don't really have to work hard for the money. The money will be working harder for you. How exactly is through decentralized finance, or it's known as, DeFi. DeFi is also known as Finance 2.0. So let me just brief you about what exactly is decentralized finance, because it's important when we're discussing blockchain and fintech. So what is decentralized finance? Decentralized finance is an ecosystem which comprises of various applications that are built on top of publicly distributed ledgers. Publicly distributed ledgers could be bank institutions, could be and other financial institutions. So whenever you are building applications on top of it, such that it facilitates permissionless financial services. Permissionless financial services like maybe trading, investments, loans, insurance, payments, remittance, etc. So whenever there are other applications being built on top of the regular or traditional financial institutions, but through the blockchain technology, it's known as decentralized finance, or so to say DeFi. Now, to sum it all briefly, the current financial systems are very greedy. They are basically very exclusive, so they actually restrict access to a massive population, a massive part of the world's population. The world, so to give an example, the world is now richer than ever before, but the gap between the rich and the poor, it's increasing and it's growing exponentially. Rich are hoarding their wealth, while on the other hand, without access to modern financial instruments like debit card, banking account, etc., how can people be expected to catch up to work towards a bright future? So the flaw with the current financial systems is that they reward the greedy, while the most important benefit with decentralized finance is that it empowers the masses. So decentralized finance holds, I would say, a very important role in not just the finance industry, but also in our lives, in the lives of regular people. So I'll not go into the details, the technical details or exactly theoretical details, but to just give you how the future, give you a picture of how the future will look like if this technology is actually realized, if this decentralized finance actually gets adapted. I'll just share some vision with you. Now, this is a far-stretched vision of adoption of decentralized finance, but if it actually takes place, if it's actually realized, it's going to change the world for better. And I guess it's going to be, the world is going to be a much better place, much easier place for us to live in. So there are 4 interesting use cases that I find of decentralized finance. Let me just quickly discuss them. So there is real-time payments first. Now, to explain real-time payments, I would, in a line, if I have to explain what exactly is real-time payments, just imagine live streaming of your financial life. So, for example, let's say right now we have to work for 4 weeks, 5 weeks, 3 weeks to get a salary debited into the account, right? Why should it be so? Just imagine as and when you're working, you are getting rewarded or you're getting paid for that particular work. It's real time. Second scenario, most of the vehicles that are rented out right now are rented on the basis of day, on the day basis or on the basis of hours, 6 hours or particular windows. Like even in Ola, you have 4 hours, 2 hours, 6 hours. But why should it be so? If I, as a user, am driving the car for let's say 4 hours, 6 minutes, and 3 seconds, I should be able to pay for exactly that time. So this is called real-time payments. Through the intervention of blockchain technology, you can actually pay for exactly the kind the time you're utilizing the resource for, and get you can also get paid out for the particular service that you're providing the user with. So I'll also state other examples in later on. Let's move on to the other part. Second is machine economy. Machine economy is very interesting. So to explain machine economy in one line, again, I think you might have heard of autonomous Uber. Now, autonomous Uber is very famous in US, especially in Silicon Valley. It has been adopted now. Autonomous Uber is basically self-driving Uber cars which do not need any driver or any managers, etc. Now imagine these autonomous cars are being upgraded to decentralized Uber. So with a decentralized Uber, what really happens is that a car doesn't need a driver or a manager. It basically has its own wallet. It can rent out itself without any driver. Maybe if the driver is on work or is asleep, it can rent it out itself. It can ferry the passengers to the destinations. It can fill out petrol and electricity whenever it's low on that, and it can pay out for that particular petrol from its own wallet, and it can also accept the payments. So this is what machine economy is. This is what an era of decentralized Uber would look like. Third is digital assets or synthetic assets. So asset is basically anything that holds value. Now synthetic assets or digital assets are digital representation of these assets, or digital representation of anything that has real world value. Maybe stocks, maybe bonds, shares, commodity, precious metals, anything. Now, what happens with synthetic assets is that they make anything, they take anything from your life that has value. May it be tangible, like I already told, or intangible, like intellectual property, like music, and convert it into something which is highly liquid. So I can right now not buy any patent, go about buying any patent or any particular artist's creation or music or something. But synthetic assets help us to. So as we've already discussed, for example, we all know that we can create a lot of wealth through investments. But people who do not have any financial history and transaction history, they do not, or people who do not have any that minimum balance amount, they cannot really invest into any securities. But through synthetic or digital assets, they can actually get access to these financial opportunities which they didn't have access to, and they can actually brighten up the future. So this is what these industry of synthetic assets looks like in the future. Then next is very important, real estate at the speed of light. So right now I know the industry of real estate is very much bureaucratically complex. It's also very illiquid right now. For people to basically exchange property or to do property transaction, it becomes very difficult. The validation process, the paperwork, the process of transaction of money, everything is very complex right now. So in the future, what will happen is that the house and the apartment rentals, they'll basically not work on paper contracts, or they'll also not work on month-to-month payouts. The landlords will actually get payment for they can basically sell, they can basically assign particular percentage of the land or the property as tokens. They can then sell the tokens to a particular person. Now, when the particular person has X percentage of the tokens or X percentage of the property, the landlord will be able to get X percentage of his rental income of the month on the daily basis. So you don't really have to rent out the whole property. You can rent out a part of the property and get paid out daily. That is real estate at the speed of light. So it's actually being done by a company right now. So that's the screenshot. They are actually doing it in US now. Uh, Next, what I would want, so this was all about decentralized finance, and this was majorly about, I would say, blockchain technology in the industry of finance or capital markets and fintech. With all of this said, I just wanted to add that I don't want to give the impression that blockchain technology is a solution for anything and everything. Even though media says that it's going to solve world poverty, counterfeit of products, drugs, potentially also save the rainforest. The truth is that this technology is in its infancy, and that we're going to see a lot of experiments take place, and probably a lot of them fail before we actually see that what is the correct use case, what is the appropriate use case of this technology in our economy. So something the blockchain might be very much useful for some other nation in maybe finance, but might not be suitable for India. So that's the kind of experimentation that we need right now with this technology. But there are tons of people who are working, whether it's financial institutions, startups, who are working on this technology and adapting technology in the use cases. So I think we need to prepare ourselves for a world where distributed or autonomous institutions will play a significant role, where there will be decentralization all over, whether it's finance, whether it's supply chain or anything. This technology is definitely going to change, if not all, but at least a lot of things um, around us, whether it's in finance or any other industry. And that definitely will also affect our daily life. So I think it's very important for us to be aware about this technology, for us to keep up with the trend and the changes in this technology. So next, I would like to discuss how are exactly we utilizing this technology, how are we working towards decentralized finance. So my venture is known as Stack Finance. So Stack Finance is basically we are envisioning to create a decentralized personal finance industry. We are essentially working for democratization of finance right now. For people to access all the financial opportunities, for each one of us, it's very difficult. For me to invest internationally, for somebody else to maybe take a loan or credit, it's very, very difficult. It might not be that easy. And for HNIs, but for premium users, it becomes very easy for them. So there are a lot of things, especially also financial awareness in India is very much lacking. There's only 24 to 25% of people who are financially aware, and only 3% people who actually participate in investments. So but I believe that being citizens of an emerging country that is growing exponentially, it's important that we also take advantage of it. We also keep up with this growth and make wealth for ourselves. So essentially, that's the vision behind this company. We are working towards a future of personal banking. How exactly is that? Stack does not so basically, I say that we're living in a science fiction where the world is dominated by autonomous cars, probably in the future also drone delivery. But when it comes to banking, it still feels the same, exactly like this. So this is what we want to change. A revolution banking is coming, and we want to take an early entry into it. We believe that banks are old, and in fact, Bill Gates says that people don't need banks, people need banking, and that is what we're here to provide. We basically want to give a banking experience as smart as your smartphones right now, and we are hence building India's first global mobile banking platform. So we basically envision to redefine personal banking for 7.8 billion people worldwide by creating a global marketplace banking platform. So this is a global marketplace banking platform which basically ties up with the best fintechs and the best banks to provide you with the best as per your need, but with extreme automation, customization, and intelligence. So just imagine a bank with a brain. So that's what we are trying to build. So right now, for example, for an average user in India, he or she has 3 to 4 apps around personal finance, whether it's savings account, credit card, investments, etc., a wallet or something. So different accounts, different passwords, different IDs, different fees, etc. All of this will be removed, and there's just one app that does everything for you with extreme ease and at minimum cost possible. So we want to be that marketplace bank for you. In the future of Stack Finance, we want to get into international investment. So we also want to provide international investing opportunities. But right now, as I said, in the capital market space, this is how it looks like. This is how the scenario is. Basically, there is an investor, there are issuers, there are borrowers. There's KYC, ML industry, there's custodian, there's the back office, there's settlement house, there's clearing house. All of them are involved in a mess of process which is repeated and tedious and does not provide any efficiency. So we basically want to utilize blockchain to change it into this. So that is where we come as Stack Finance. So we basically want to bring things on blockchain so that international investments become much more efficient and much more cost efficient, in fact, but obviously without any use of cryptocurrency or any Bitcoin, etc. We just want to utilize the technology. So that's a future vision. And that is me. I am Smriti Tomar. I had introduced myself although, but that's me. I have been working since the foundation of this company. We're working really hard to provide or to solve the problems that I personally had around finance, around fintech. And I don't want any millennial or any person right now in India to suffer with these problems. I want people to be more aware around finance. And that is what we are really working hard for. And that was me. Thank you so much. I hope it was short, crisp, and I hope I could make some point and add some contribution towards your understanding of blockchain. Uh, I didn't really wanted to go into details regarding how a smart contracts run, what is MetaMask, etc., because I believe not everything can be learned in one day. But I am very much available to chat or to interact later on if anybody wants to have some personal interaction, wants to have any queries, want to learn how to learn blockchain, or want any advice on resources or anything, I will be more than happy to discuss that. If you want to learn how exactly is blockchain utilized in various industries, especially in finance, I have some amount of knowledge for finance. I'll be more than happy to discuss. If you have any doubts regarding the technicalities, I guess I'll be the right person to discuss. And I just wanted to touch the points upon how exactly is blockchain being right now utilized and how will it look like in the future. So just to give you a basic understanding, wanted to present this. And in case anybody has any doubts or anybody wants to discuss anything or there's something that you want me to mention about or talk about, please go ahead and put it in the chat box, or if you want a personal interaction, I'll also send my mail ID and my LinkedIn profile. Please feel free to ping me up or hit me up. I'll be more than happy to help you with anything. So thank you. Over to you all.
So I think we have some questions, Smriti. So I will read one by one. Uh, so the first question is, can blockchain control the confidential information of governments and business?
Of governments and business.
Yes.
Hello. Blockchain, yes, it
Yeah.
depends on what.
Can you get?
Yeah, so it depends on the kind of blockchain that you're using. So, for example, Arthikoda is a blockchain that's being highly utilized in, as you said, government and financial institutions use cases. So, their government takes control of government, also comes over to the blockchain with other financial institutions to maybe provide any use case, let's say KYC. But in that case, government is taking control of all the information and the use cases. So it depends on the kind of blockchain that you're going for. For usually the kind of use cases where the information is very sensitive and data security issues, you usually go for a private blockchain.
Okay. Got it. Yeah. So yeah, next question. Hello.
Yes.
Yeah. So how Stack Finance is using blockchain?
Okay, so as I said, we are currently not into exactly blockchain, but how we're going to use it in the future is we're going to facilitate international investments, something which is really inaccessible to users right now. For me to invest into China or for somebody from, say, in South Korea to invest into India, they have to go through a lot of brokers and intermediaries. So we're going to utilize blockchain to sort of provide internal operational efficiencies, which is issuance of securities, creating digital identity for the user, probably also, if possible, remittances and interbank transfers, so that the remittance amount that is so huge right now, as we talked about. So, for example, an average user, if he has to remit some money, let's say for investments, into any other country, maybe US or China, around 41% of the money that you're going to invest goes into remittance and brokerage charges. So overall cost comes out to be 41%. But for somebody who's going to put in a lump sum money, for somebody who's an HNI, let's say he's investing in lakhs and crores, for him the money is very less. For him the cost comes out to be just 7%. So I believe that for average users, this kind of financial opportunity should not be inaccessible. And this is why we're going to incorporate blockchain to sort of provide remittance service also to bring down the costs which are involved right now, which, as I said, come out to be nearly 40%, to bring it down to at least 3 to 4%, and for making these international investments very accessible to the users. This is what we have planned for the future.
Okay, got it. So next question is how public blockchain will survive without cryptocurrency?
Sorry, can you repeat?
How pub how public blockchain will survive without cryptocurrency?
So, cryptocurrency essentially is just a method of transactions, essentially, or to provide. Have you heard of security tokens? Security tokens, for example, is basically a virtual currency or a cryptocurrency that is backed by a particular. So I'll tell you how will it survive without cryptocurrency exactly. So for example, as I said, blockchain is very much utilized into transactions of securities, which is digital securities. So it said that why most people don't believe in Bitcoin, or why government is so skeptical of Bitcoin, is because, and why I would say it undergoes so much volatility or fluctuations, is because there's no backing of Bitcoin. If you essentially say or understand there's nothing that is underlying that Bitcoin or the currency that is being formed, it essentially is hollow. There's nothing behind it. That's why there are so many institutions that are reluctant about the use of Bitcoin in the public blockchain. Now, how public blockchains actually survive without cryptocurrency is one that I can provide. The most famous example is through security tokens. So now what are security tokens is that when you create a virtual currency or a token that is not hollow like Bitcoin, but actually has a backing security. Now the backing security could be a particular stock, could be bonds, commodity, anything. So, for example, if the company that I talked about, Smart Valor, what essentially it's doing is it's creating tokens which are backed by private security. So it is backed by shares, stocks of private companies. So these are security tokens. Now these are very much utilized into blockchain. Now in a public blockchain, if you want to create transactions of these private securities or these private, let's say, equity or any other commodity which is right now illiquid, you can easily do it through security tokens without utilizing, in fact, cryptocurrencies. So, for example, Smart Valor, it not only takes payment into through bitcoins or cryptocurrencies, it also uses cash payments to give you digital tokens in turn. So there need not be cryptocurrency involved in public blockchain as well.
Next question is how blockchain will be helpful in supply chain finance.
Okay, so as we discussed, because of the uh, just a second. Okay, so because of the ledger or the immutable ledger keeping property of blockchain, so blockchain essentially is what, a registry of assets or transactions, or if I say in layman terms, who owns what, who transacts what. So because of this property, which is immutable ledger, second, provenance, which is basically a permanent history of all the records of all the transactions, blockchain is very much useful in supply chain. How exactly is that, for example, I heard, I think Amazon is experimenting with blockchain in supply chain. There's also another project that is being run in IT Delhi around honey production, blockchain in honey production supply chain. So how do they exactly do is that right from the origin of the product to how it went to maybe some wholesaler, then maybe retailer, and then the particular user, they basically creating a digital identity for that particular commodity or a particular product, and then how it goes through that particular path from right from its origin to the user. They basically enter it over blockchain, so one block after the other. Instead of transactions, it's actually the tracing the journey of that particular product. So now they can actually see whether a product is a counterfeit or a duplicate of particular original product. So for example, it's very much prevalent in the retail industry. So many products in Amazon, in Alibaba actually come into the counterfeit category. If they utilize this blockchain technology for actually tracing back the history of this particular product, it will be very much easy for them to remove counterfeiting. And this is how it's mostly being utilized in supply chain.
So we have next question, that how long it takes to adopt blockchain by Indian banks, and as no bank is currently willing to adopt this technology due to its drawbacks.
It depends on the kind of utilization of the technology. For example, I talked about Australian Stock Exchange. Now, they started this process right since I think 2014 to adapt blockchain, and even now they have not, I would say, properly publicly executed blockchain over stock exchanges, because they believe they're still running pilot projects over it. They're still figuring out other things, and they're still to commercially basically launch, because when it's a large scale project, when it's a huge impact project, something that's going to affect a lot of people and going to incorporate a lot of transactions, maybe it is something which has to be properly validated. So if, for example, if you're using blockchain for maybe identity management or for record keeping, or maybe your own supply chain, let's say I'm a shopkeeper, or maybe I am a producer, or I have my own factory that produces some XYZ product. For me to incorporate blockchain is little easier than a bank to incorporate blockchain. So why? Because there is a friction involved. For them to particularly replace everything that they had been running until now, to actually scrap away everything and now to rebuild everything and then maybe also execute it and implement it, it becomes very much difficult. So it's essentially important, it's very important for them to properly validate it. To also, as I said, the larger the impact, the more intermediaries that are required to come over blockchain. So for example, in case of clearing and settlement, it cannot work if clearing house is over blockchain and settlement house is not on blockchain. Then essentially what you're doing is providing data registry service. But if all the parties or all the stakeholders are on blockchain, then you're essentially serving the decentralization purpose, and then the use case of blockchain is being utilized. So I think depending on the use case, depending on the kind of stakeholders that are required to come over blockchain, the time is very variable. So if it's a small scale project or small impact project, it becomes easier to implement blockchain. But especially in financial institutions, it's difficult because one, there's a resistance regarding the trust over blockchain technology. Two, implementation cost is very high, and to justify that, it becomes difficult. Third, I believe to convince every stakeholder, as I said in the roadmap we discussed, in the coming months and years, people will slowly see that small institutions have started incorporating. Now maybe we can also do that. So there's a sense of validation that they need. This is why it's taking time. So that's probably, I think that's very subjective on the amount of time that they take.
Okay. So next question is: do Stat Finance need to take approvals from government for implementing blockchain?
No, so we are basically utilizing blockchain for just internal purposes, internal operational efficiencies. As I said, we are not taking any cryptocurrencies. We are also not hindering or doing any work that comes under government regulations. Whether it's so maybe okay, we're not even converting securities into digital security or anything. We're not dealing with cryptocurrency. So we have kept ourselves away from everything that government right now restricts to be on blockchain. We only use it behind the curtain only for our internal operations. So that's why we don't really have to take permission. But yes, we are also present in Hong Kong. So we aim to apply to the sandbox of Hong Kong, so that there we can make pilot projects and extensively utilize blockchain for other purposes also, which right now Indian government doesn't allow maybe. But because Hong Kong sandbox allows us to experiment other things, we are enrolled there, and in the future, yes, if everything goes well, we might be applying for license also, and might utilize blockchain for things over and above what we have planned right now. So in fact, I just wanted to share this. We were on a stealth mode for quite some time, but now we have started the waitlist. So we have decided that for the first year, we are only going to serve around 5,000 to 6,000 users. So we're going to launch the product very soon. It's going to be out in around 3 to 4 months. But before that, we wanted it to be a very community-driven approach. So we are making our own community. We are starting the waitlist now. We already have around 2,000 users who are waitlisted. So this is the registration link. Anybody who wants to enroll for the waitlist, they can please go ahead and join us in our venture, join us in our contribution towards a decentralized financial future for everybody. Because as I said, I mean, I have been myself on that journey where I have found so many problems. So for example, I I have been very much interested into finance, or particularly into investments. I'm a huge Warren Buffett follower. But for me to access all the financial opportunities that there are right now in my phone, I have around 8 to 9 apps, and yet it becomes so difficult for me to track money, to plan my financial life, and especially for millennials or people slightly above the millennial age. They really don't have time. We don't have time to handle so many Excel sheets, to maintain Excel sheet for the money that's coming in, going out, to maintain plans for ourselves, to study, and then to implement principles that maybe experts say, or whatever trends that market is going through. We do not have time to follow the news also. So this is our effort to sort of this essentially is a product that is a solution to my problems, but I believe that it's going to solve problems for millions in India and potentially billions outside of India. So we're going to start the waitlist soon. Anybody who is interested, please register. We will be more than happy to have you on the waitlist and be the first customers of the product. In fact, you can also refer your friends, and the moment you refer your friends, you jump up the waitlist, and your friends jump up the waitlist too. So, thank you.
Yeah, as you mentioned this registration link, so is this for application, or this is like a website kind of?
This is a wait listing that we have started. So we are not commercially launched yet. We will be launching in 3 months. So in the period of 3 months, whoever comes into the wait list will be our first customer, and we have kept a cap of 6,000 users. So if you are into the 6,000 list, you will be our customers. Otherwise, we'll be opening the user base next year. So in this year, we are only restricting ourselves to 6,000 users. That's why we're starting the waitlist. So the first 6,000 who come to the platform will be the customers of Stack.
Okay, so I have some questions from my side as well. Like you mentioned about Stack Finance. So Stack Finance will act means can be like a consulting firm like you, where you will be having the financial institution as clients. Where you mentioned that all the financial institution like Zest Money and other, they will come on the one platform. You don't need to maintain like multiple bank accounts. It will be on the Stack Finance on your app. So
Yes.
will you be partnering with all the banks and the financial institutions? All the Stack Finance will partnering?
Yes, that's a great question. So yes, in fact, as I said, we are a marketplace banking platform. We don't exactly, just a second, I'll just show you. Yeah. So we don't exactly work ourselves. We say that whoever is best in their product, whether it's banks, whether it's fintechs, we involve them all on our platform. We're going to provide a savings card. So as you can see, a debit card and a savings account in partnership with the bank. And we're going to provide an investment platform. So an investment platform, basically you get access to every asset class, whether it's stocks, whether it's mutual funds, index funds, everything on single platform. That way, you don't really have to go to multiple platforms, maybe for trading or for investments. We also provide advising. So we create our expert stacks. Expert stacks are basically our custom portfolios that you can use. So for example, if you are not well versed with investments, if you don't know where to invest or how to create your portfolio, you can actually use our expert stats, which are maybe about retirement or about marriage or education for your further education. So you can utilize our expert stats for that. Third, we provide a flexible credit line. So for the investment portfolio that you have with us, we give you a flexible credit line. So that way, you always stay invested. You really don't have to pull out money from the bank or liquidate your funds. You can easily access our credit line. In case you have any urgent requirement in terms of maybe financial requirement, you don't really have to pull out money from the bank. You don't really have to liquidate your maybe the fixed deposit or any portfolio that you had before. You can simply use the credit line. So in fact, because you're so interested, I would like to present a small video, if I may, so to explain your the whole concept. Just a second. So that was a small trailer or glimpse of the product.
Yeah, it was cool. Hello.
Sorry, can you repeat?
Yeah, actually we saw the video. I think it was fine.
Oh, okay.
Yeah. Uh, uh, Smriti, some last 2 or 3 questions, and I think we can close the session. Okay.
Yes, yes,
So,
please.
yeah, just a minute. Yeah, the question is, will the blockchain in Indian government will will the Indian government use blockchain to save online security breach, stop sale of information of public, and stop black money?
So whether the government will or will not use it, I really cannot comment. I mean, it's maybe you should be asking this question to probably one of the think tanks or the experts from the government
Okay.
institutions. But okay, I can give a recent use case. So, for example, if you might have heard of the Carvi fraud that happened recently, I think a month back. What really happened was that Carvi is basically a broker that helps customers to sell and buy stocks and shares. So what happened was that they pledged their customers' shares or stocks. They basically used customers' stocks to liquefy them, and they generated money out of it without without customers' permission. So they pledged customers stocks and shares and got money in return for that. That was something which is obviously unacceptable, and it was a major fraud, and it was not just a small money, it was crores of money, hundreds of crores. So the government found out about that, the regulators found out about that, and it has now, I think, revoked the license of Carvi. Carvi had a great reputation until now, and in fact, a lot of businesses, not just customers, are also working with Carvi. So, for example, here is a proper use case of blockchain. So, if, for example, blockchain was used in this particular sphere, where maybe brokers are using or incorporating blockchain, and even government is regulating this through blockchain, there could have been a proper transactional history of what stocks customers hold, what stocks does Carvi hold, what is being sold, what is being bought, and it could have been properly regulated. And not just Carvi, I mean, there are a lot of scams and frauds that have happened in India that potentially this technology could have solved. So yes, security breaches, I would say data security, these are a few use cases that probably even government should be flexible upon adapting on for this technology, because once government is flexible, I think a lot of companies would be able to incorporate blockchain into their particular use case, and that helps in not just functioning but also, as I said, mitigating a lot of risks and fraud in the future.
Okay. Yeah, I think we got your question. Some last two questions. So, do cross remittance really work in Indian banks?
Cross remittance right now, I think you might have asked in terms of blockchain, whether blockchain can be utilized by Indian banks for cross remittance purposes. So as of now, yes, nobody, no government right now, no financial institution or no bank is right now using blockchain for cross remittance. There are a lot of South Korean banks that are utilizing blockchain for remittance purposes, cross remittance. Now, this is something that blockchain has a massive use case in, as I already told, especially Ripple blockchain. So yes, potentially yes, it can be used, but right now no government is no bank in India is using this. In fact, I think there were a few pilot cases where some banks were internally experimenting with internal transfer. So, for example, SBI Bank, I think SBI or HDFC first, they were experimenting or doing pilot cases for money transfer within their bank branches. So that is what they have done until now, but no cross-border transfers.